Welcome back to Investing Talk Podcast. Today we're diving into a really interesting one, a stock that's, well, generating a lot of buzz, ACHR Aviation. And the big question we're trying to answer, looking purely at their recent Q2 2025 filings, stock reports, market chatter, all that, is it actually a good time to buy this stock right now?
It really is a pivotal moment for them, isn't it? We're not just talking about, planes getting a bit better. This is a bet on a whole new way of moving around cities, urban air mobility,
Oh,
UAM. It's a big shift they're aiming for.
absolutely. This whole eVTOL space, electric vertical takeoff and landing, I mean, it's super speculative, no doubt, but the potential payoff,
Yeah.
transformative.
Yeah.
And ACHR's right in the thick of it. So our job today is basically to cut through the noise, pull out the key financial bits, the competitive stuff, the tech side from the sources you shared so you can really get a handle on the risk versus reward here.
Oh, and before we really get into it, quick reminder. Please do subscribe, like the show, leave a comment. We love hearing from you. And hey, if there's a specific company you want us to look into, drop it in the comments below.
Okay, let's unpack ACHR. We probably need to start with the financials, right? This sort of ground reality for a company like this.
That's exactly right. And, looking at those Q2 2025 numbers, the first thing you notice is, well, revenue is tiny, just $0.6 million for the first half of 2025. But honestly, that's completely expected. They're pre-commercial. The whole game right now is spending money to get certified, not making profits.
Right, and that spending, the burn rate, it sounds pretty significant.
Right.
What are we talking about in terms of costs to get that midnight aircraft flying commercially?
Oh, it's high. Definitely high. And that really highlights the risk here.
Yeah.
Operating losses were $217.7 million just in the first 6 months of 2025. They're pouring cash into R&D, setting up manufacturing, and that really demanding FAA certification process. It's all about getting to market fast. And yeah, speed costs a lot.
Okay, so with that kind of spending, the number one worry for anyone looking at this must be the runway. Do they actually have enough cash to survive if, say, the FAA timeline slips by 6 months? That can happen, right?
That is the crucial question. And it's why their balance sheet is actually a core part of the bull case, believe it or not. What's really interesting is their liquidity. Despite burning all that cash, ACHR finished Q2 2025 with $371 million in cash and equivalents. And here's the kicker. Zero long-term debt.
Wow, zero debt.
Zero. You compare that to other companies at this stage, many are loaded up with debt. It's a big difference.
Okay, so that cash pile plus no debt, that's a serious cushion. How long does management think the $371 million will last them?
Well, the guidance suggests they've got enough operational runway well into 2026. Now, about your point, a 6-month delay, yeah, that would definitely force them to rethink things, maybe slow down R&D, maybe look for more funding. But being debt-free gives them options, gives them time that competitors drowning in debt just don't have. So yeah, that buffer significantly reduces the immediate financing risk.
That strong balance sheet definitely helps. So they're burning cash now. When do the analysts actually expect ACHR to, turn the corner and start making money, become a viable business?
The Wall Street consensus seems to be pointing towards break-even or maybe positive EBITDA sometime in 2027. But the really critical point, the inflection point, is much sooner. Revenue is expected to jump massively right after they get that FAA-type certification and start commercial flights. That's probably late 2025, maybe early 2026. Honestly, the company's financial future pretty much hangs on winning that regulatory race.
That cash burn really underscores why having strong partners is so vital, doesn't it?
Let's pivot to that, the competitive side. Because having a great aircraft means nothing if someone else gets regulatory approval first. This is where ACHR seems pretty strategic.
Yeah, exactly. The barriers to getting into this business are just huge, mostly because of the incredibly tough regulations.
Yeah.
It's not like just building a bigger drone. You're talking about certifying a totally new kind of aircraft to carry people over crowded cities. It's a massive undertaking.
You mentioned the FAA approval. How far along is ACHR compared to the competition?
Well, the analysis we looked at cites ACHR as one of only 3 U.S.-based eVTOL companies that are actually in the final stage of FAA certification right now. They've hit what's called G1 status. That's a really big deal, hard to get. It's not just a small lead. It represents years of work with the FAA, countless tests. New companies can't just replicate that quickly. It gives them a serious edge, a real competitive moat. And they seem to be reinforcing that moat too, right? Not just focusing on the FAA, but locking down key partnerships that address big investor worries. Like, is there demand? Can they actually build these things? Is the tech validated?
Oh, absolutely. They've been very smart about securing partners in critical areas. First, Demand. They've got United Airlines sign up for potentially 200 aircraft. That's a major airline saying, yes, we want these. Huge validation.
Okay, demand check. What about the manufacturing risk? That trips up a lot of startups, moving from prototypes to actual mass production.
That's where Stellantis comes in. They're providing massive manufacturing support and expertise. When investors worry, can Archer actually build these things at scale?
Yeah.
Having an auto giant like Stellantis involved seriously reduces that risk. That's not just a friendly agreement. That's industrial muscle.
Makes sense. And there's a third piece to government contracts.
Exactly. Contracts with the U.S. Air Force. That provides validation, gives them technical feedback, and brings in some early revenue, too. For an investor, having the government basically give a thumbs up, that's a powerful signal about the tech and their security. So this focus on specific routes, like airport shuttles, backed by these specific partners, it really puts them out front.
And the plane itself, the Midnight aircraft, I saw mentions of it performing really well in tests. Maybe better than competitors on speed and how much it can carry.
Yeah, the report suggests successful test flights demonstrating strong performance metrics. So it's this combination, the tech advantage, the regulatory progress, the solid partnerships that seems to be hitting home with the market.
And that momentum, that positive story, it's definitely showing up in the stock price, right? Which brings us to the technicals.
Absolutely. The stock's been on an absolute tear, up over 200% in the last 12 months. That tells you investors are aggressively betting on these upcoming milestones.
Wow, 200%. That's huge. Suggests a lot of good news might already be baked in. Where is the stock trading right now? And do the technicals suggest there's more room to run?
So as of October 3rd, 2025, it closed at $11.52. It nudged up a bit after hours to around $12.17. And technically, the picture is still very strong. It's trading well above its 50-day moving average, which is around $9.53, and also above the 200-day, around $9.42. That generally points to a solid long-term bullish trend.
Okay, the trend is up, but after a 200% run in a year, isn't there a risk it's getting a bit frothy, maybe overbought in the short term? What are the momentum indicators showing?
That's a really fair point, especially for anyone thinking about jumping in right now. If you look at the 14-day RSI, the Relative Strength Index, it's high. It's at 74.46. Now, typically, anything over 70 suggests the stock might be getting overbought short term. But, and this is important, you have to connect it back to the fundamentals. That high RSI is happening because everyone is laser focused on that potential November-December certification. The market is pricing in that catalyst, and that's what's driving the momentum. So, yeah, maybe it could pull back briefly, but the technical strength really just reflects how critical that upcoming news is.
That makes perfect sense. The market's basically placing a massive bet on Q4 happening as planned. And despite maybe some short-term overbought signals, Wall Street analysts seem pretty much on board with the story, right?
Overwhelmingly bullish. Out of 9 analysts covering Archer, 7 rated a buy. That shows confidence not just in the tech, but in the management team and that lead they have in the regulatory process. The average price target is around $13.43, which still implies, decent upside, about 16.5% from recent prices, and some targets go as high as $18.
Let's drill down on that immediate future then, because all this confidence seems tied to catalysts that are just weeks away. What's the absolute biggest trigger everyone's waiting for?
Okay, the entire investment case for this quarter, maybe even the next year, it all boils down to one single event: getting final FAA type certification for the Midnight aircraft. We need to be clear what that actually means. Type certification is the FAA saying, okay, this aircraft design is officially safe and airworthy for commercial flights. That's the green light to start carrying paying customers.
The make or break moment and the timing on that.
Management's guidance suggests they're aiming for November or December this year, 2025. That really tight, high-stakes window is exactly what's fueling all the current excitement around the stock. And just before that decision, we get another key piece of information. The Q3 2025 earnings report. That should be out by mid-November. It'll give us the latest updates on how certification is progressing, maybe some pre-order news. It'll set the stage for that final regulatory push.
And when the stakes get this high, the rumor mill starts working overtime. We've definitely seen a lot of chatter about potential new deals or even bigger corporate moves.
You have to acknowledge that intense anticipation for getting the operational green light. And yeah, that spills over into speculation about strategic moves. We've seen pretty consistent rumors about potential new international partnerships, particularly looking at Europe and the Middle East, as they try to build a global presence quickly.
And the M&A angle too, right? Talk of buyouts or major investments can send a stock like this flying. I've definitely seen some big names whispered about potentially getting more involved.
Correct. Names like Apple, Stellantis, and United Airlines keep popping up in the speculation about deeper investments or even acquisitions. And let's add a bit of context because it makes the rumors seem less random. Apple, well, they need a future mobility strategy. Stellantis wants to lock in manufacturing volume and control tech. United wants control over its future fleet. So you can see why those names make strategic sense. But, and we have to really stress this, these are just rumors, unconfirmed chatter at this point.
Okay, so massive potential upside, all tied to a very tight deadline. But that naturally brings us to the flip side. The risks. If things go perfectly, great. But if that schedule slips, the downside could be pretty brutal.
Absolutely. The number one company-specific risk, the one you, the listener, really need to focus on, is that high cash burn rate we talked about, that $217 million loss in 6 months. If that FAA certification gets delayed, even by a few months, or if the commercial launch afterwards hits problems, their financial runway shrinks fast. They might have to raise more money, and that could really dilute existing shareholders.
And it's not just the regulatory clock, is it? There's just the sheer difficulty of actually doing this in a brand new industry.
Definitely. Execution risk is huge. Scaling up production. Stellantis helps, sure, but building a completely new type of aircraft in large numbers is way harder than building cars. If they stumble on deliveries to United or the Air Force, investor confidence could evaporate. Plus, the whole eVTOL sector is just volatile. Valuations swing wildly based on regulatory news anywhere in the world, or just broader economic news.
Okay, so pulling all this together, the analysis we reviewed is clearly very positive. It gives Archer an overall bullish rating of 8.5 out of 10.
Yeah, and that rating seems built on four main things. That strong, debt-free balance sheet giving them a cushion, the high barriers to entry where they have a lead, those key partnerships with United, Stellantis, and the Air Force providing validation and support, and, of course, this clear pipeline of massive news catalysts coming up in Q4.
So what's the takeaway for an investor thinking about this? Is this a short-term play, a long-term bet? How should you approach it?
Well, based on the sources, it looks attractive for potentially two kinds of investors. Firstly, maybe the short-term trader, someone looking to play the volatility around those Q4 catalysts, the FAA news, the earnings report. It's definitely going to be volatile. Secondly, it could appeal to the long-term investor who believes in the whole urban air mobility story and sees Archer's competitive advantages that regulatory lead those partners as strong enough to fend off competitors down the road.
Okay, so here's a final thought, something for you to really chew on after listening to all this. We've got this massive 200% run-up in the stock, completely banking on that November-December FAA certification window. The core dilemma seems to be, if that final approval gets delayed, say just 2 or 3 months into early 2026, does Archer's strong, debt-free balance sheet provide enough of a cushion? Does the stock just tread water until the new deadline? Or does the market panic? Does it see any delay, even a short one, not as a minor regulatory thing, but as a failure of execution, sending the stock tumbling? That difference cushion versus panic, that's really the key risk you need to weigh.
That really is the make or break question for Q4, isn't it?
It is indeed. Well, thank you for joining us for this exploration of Archer Aviation. We appreciate you tuning in. We'll catch you next time on Investing Talk Podcast.